Oh, no, not like that.
Good afternoon. So first we'll introduce ourselves. What is your name, please? Kolhapur. From where? Margao. Goa. What about you? Kankoli. Okay. So this is the portions for the compulsory paper, that one. That is fund flow statement and cash flow statement. These two topics they are given to us to making the discussions. So nowadays for scoring, management account is the very best subject. You have to score well in this connection. Nowadays they can asking the questions 5 marks each. Every question 5 marks. There will be 80 marks will be there for your question papers. And 5 marks question. Each question contain A, B, C, D. 5, 5. 5 is of 5, 25. Out of 5, you have to attempt 4 in the examinations. Like that. So they can ask you questions on the grounds for 5 marks each questions. Now we'll see fund flow statement and cash flow statement. So here for the management, there are some tools to taking decisions. So it is one of the important tools in the management to take the decisions regarding the business. So these are the very important in the sense fund flow statement and cash flow statement, because much depends upon the finance. Because for business, finance is required, because finance is the lifeblood of each and every business. We are doing the business to earning profit only, correct? We commence business to earning profit, not getting loss there. Therefore, there are some important tools in the management. So branches, actually there are 3 branches. First will be management accounting, the one branch. Another is the financial accounting, the another branch, and cost accounting, the third branch. There are third branch, and this is the management accounting is the one of this branch there, where all the managerial post can come under this categorization, and they can take the decision regarding the business. Therefore, there are very important tools in the sense first is cash flow statement and another is fund flow statement and another is ratio analysis are there, then common size balance sheet, comparative balance sheet. Nowadays they can finding the all financial statement, because we can doing the business and at the end of the business we can ascertain whether our business is going on smooth ground or not, how much profit will earn, how much loss will be there. Therefore, we have to prepare final accounts at the end of the accounting year. Nowadays, we are finding the accounting year which consisted for 12 months, commence from 1st April and ends on 31st March of years. It is called income tax year, assessment year, financial year. So, at the end, we can prepare the final accounts. Then, what is final account? Final account is a statement showing trading account, profit and loss account, balance sheet, prepared on the basis of trial balance, and ascertain the financial position and net profit of the concerns. They prepare the final account by means of trading account, profit and loss account, and balance sheet. Now we'll see this. Out of that important tools, first we'll see the fund flow statement. What is the meaning of fund flow statement? We have to prepare a balance sheet. We prepare a balance sheet to ascertain the financial position of the concern. And in that balance sheet, we can show how much funds is there, how much fund is available. Then what are the sources of fund and what are the application of funds? In what source you are covering the amount, and on what source, on what application you have to give these funds. So sources of fund will be by means of issuing shares, by means of issuing shares, then by issue of debentures, then by taking loan, borrowing loan from others, from banks, you can start your business. These are the possible sources. First will be own capital will be there. You can borrow money by issuing shares, by issuing debentures. So these are the sources. With the help of that source, then we can apply that source. How we can go on making the application of source for that one? The application of source will be payment of purchase of things, then repayment of loan, redemption of debentures, then repayment of shares, then another will be payment of income tax, payment of dividend on shares. So these are the applications. So for source what we are getting, with the help of that source we can making the application of funds. And for that, this is a very important things for, it is very important for making the adjustment of working capital. Then what is working capital first? So working capital is nothing but it is the excess of current assets or current liabilities. It's called working capital. Then what is required working capital? Why working capital is required? To mitigation the day-to-day expenses. To mitigation the day-to-day expenses, working capital is required. Suppose you construct a big factory, say for 10 crores. Only construction of factory is not this things here. To running that factory, other things are required. Means it requires purchase of material, labor requires, overhead expenses are there. And to mitigation of that, to mitigation of the expenses, working capital is required. It is working capital is current assets minus current liability is working capital. Then what is current assets? Current assets are those assets which can be converted within a span of time into cash. Immediately it can be converted into cash. It's called current assets. For example, cash in hand, cash at bank, bills receivable, sundry debtors, then prepaid expenses. Correct? So these are all the current assets. Immediately conversion can be made into cash. It's called current assets. Assets are fixed asset. Current assets, fictitious asset. Correct? Fixed asset are those assets which can be remain fixed. Correct? Remain fixed. And in that they can go on making purchase of asset only. Fixed asset, land and building, furniture, machinery, motor cars. So correct? Because in that we can go on making investment in huge amount, big amount. It is called fixed asset. Correct? So every day we cannot purchase the fixed asset. Correct? Purchase of furniture, purchase of machinery. Correct? Construction of building every year we can't make these things. So that is fixed asset. And suppose you make a construction of factory, to running that factory it requires some expenses, and what is the possible expenses you can go on making forecasting for this. So therefore we can prepare the fund flow statement. How much fund available? What are the sources of fund and how you apply that funds? For that they prepare a fund flow statement first. It is very important statement. So for this we will see in this connection here what is the meaning of funds here. First we will see what is the meaning of funds. So here funds can be applied for the three things. First will be a narrow sense of funds, means a statement based on this concept is known as cash flow statement. First will be narrow sense. In a narrow sense, so cash flow statement is the narrow sense. Funds available. Funds mean finance, money. Money means what money does. It is a acceptable things. Money requires everybody. Acceptable things. Money means what money does. Crowther definition you may see. This thing in economics. So It is the statement based on the concept is known as cash flow is the first thing. Then second they are given to you in a broader sense, funds means all the financial resources of cash flow through working capital accounts and fixed capital accounts. First sense is, so in your books it is given. So just it is given fund flow statement. It is given in page number that is 160. Page 160. Page 160. You are not got this? Not print out? Yeah. Okay. You are not print this thing. One thing is there, just see the material which is provided to you, it is a very important material. All questions comes in that material only. Asking for 5 marks only. Okay. So first we'll see the meaning of these things. So I got the here notes on this ground here, which is based on all these things. So which ask here like this. For example, what is the meaning of working capital? Discuss the sources of working capital, meaning of working capital. All these questions which is followed in the examinations. I will give these notes to you. Don't worry for this thing. 5 marks question they can ask you. And all comes in the books only. They are not asked anything outside the books. So here we will go deeply little. What is the meaning of funds first? Funds means in narrow sense, funds means cash flow statement. Another sense in broader sense. So it is a statement showing the given to you working capital. The application of working capital, that is current assets or current liabilities. The narrow means it is a little bit broader sense. And third sense they are given to you, funds means working capital, that is current assets minus current liabilities. So these are the things. Don't take anything, just listen only. Each and everything it is given here for explaining all these things. Now we'll see in this correction the important to understand these things. Funds means funds available, and it can be shown in the balance sheet here. What is balance sheet? Balance sheet is a statement showing the list of assets and liabilities on a particular date. It is called balance sheet. There are two sides, balance sheet, asset side and liability side. Nowadays, we have to prepare the balance sheet in vertical form as per Companies Act 2013. We are not following now the horizontal balance sheet now. Vertical balance sheet we have to following there. Correct? First will be 1 and second as per Companies Act 2013, that can be following here. So here these are the things. So the narrow sense they are given to you, it is a cash flow. Then broader sense they are given to you fixed asset, cash flow and fixed asset, and another they are given to you working capital. That is concept of working capital, current assets or current liability. So this is the meaning of funds they are given to you. Now you see in this sense, this cash flow, that is fund flow statement, can be renamed under different names are there. There are so many names for this. Fund flow statement can be renamed for the different sense are there. There are so many names for these things. Correct? So what is this? What you call for the first time? They are given to you. Fund flow statement is known on different sense, such as first will be they are given to you where got and where goes statement. Where got and where goes statement means, I told to you, sources. Fund flow statement means it is a sources and application. Sources means in what source what comes and what goes. Means what are the sources of incoming and what are the sources of outgoing. This is the they are given to you what got and what gone statement. Another name is statement of sources and applications. It is also called statement of sources and application. Then third will be statement of changes in working capital. It is statement of changes in working capital. Whether your working capital is increased, whether your working capital is decreased. That is given in this sense here in this case. Then statement showing summary of financial operations. It is the statement showing the summary of the financial operations. All the financial operations that can be made, it can give the summarization for that. So it is called summary of all the financial statement is also called as fund flow statement. Then statement, so a statement of sources, application of working capital. It is nothing but statement of sources and application of working capital. Then next is given to you fund flow statement. So near about it can be renamed at 8 things. So this is called fund flow statement. Now they will ask you the question on this ground is like that. So what is fund flow statement and give the format of fund flow statement for 5 marks. So your remain means you write something regarding this because you have to answer your all questions within the 20 pages are there. In that 20 pages you have to answer the things. Only one paper is there which consisted 20 pages. In that 20 pages you have to answer the things. Correct? And assessment will be online assessment will be there for M.Com and all. So therefore they will give to you what is the format of fund flow statement. So format of fund flow statement, it is prepared by T form. First will be sources and another will be applications. So in that sources, what are the sources, and on the right hand side, what are the applications. So I told you what is the sources. First will be funds from operations. It is first will be on the sources side, how much fund is for making the operation, how much fund available to making the operation. It is first thing in there. The another will be going to issue of new share capital. If you issue the shares, by issuing shares, how much amount is collected, that can be shown there. Then by issue of debentures. By issuing debenture, by selling debenture, they can collect the money. Then next will be long-term borrowing. Sometimes they can take a loan which requires long-term here in these connections. For business, long-term requirement is there because loans are 3 types: short terms, medium terms, and long-term loans. But for business, it requires long-term loans, borrowing of long-term. Then another, sale of investment. Sometimes you have made investment. If you sell that, you will get the source for that. So incoming of all the money by selling your investment is there. The next will be sale of fixed asset. Sometimes you are selling the fixed asset. For example, sale of furniture, sale of land, correct? So sale of motor cars. So due to old, furniture is sold due to old. Then piece of land means to making construction. You are selling the land also there. By making this thing, we got a source of money there. Funds available by making these things. The next will be dividend received. On shares we get dividend. There are 2 types of shares. One is equity shares and another is preference shares. 2 types of shares are there. Equity shares are called as it is the main source. Equity shares means they are the owners of the company. They are one of the pillar stone of the company. It is called. They have got chances. We can consider is the owners of the company because rate of dividend on equity shares is not fixed. They are the risk bearer. When they get huge amount of profit, they will get the dividend. If there is no profit, they will not get dividend. They are the risk bearer. But they have got the special voting right. They can become the board of directors also by holding elections now. They become the board of directors and they have got voting right. Rate of dividend is not fixed, but they can raise their voice. They can take active participation in the day-to-day conduct of the companies also, the equity shares. Then another is preferences. Preferences are those shares who have got the preferential right. They are the claimant of the company. Means rate of dividend is fixed. They are not got voting right. Equity shareholder has got voting right because by vote they can elected the board of director also there. So voting right is there. Got it? Then whereas on preferences they are not got voting right, but rate of dividend is fixed. Therefore they can go on making the categorization will be preferences First will be redeemable preferences, irredeemable preferences, cumulative preferences, non-cumulative preferences, convertible preferences, participating preferences, non-participating preferences. I will explain this concept in one line. What is the meaning of redeemable preferences? Redeemable preferences are those preferences which can be redeemed back after certain period. Say for example, you have taken the preferences for 10 years. After completion of 10 years, they can redeem back. Redeemable. Irredeemable preferences are those shares which can redeem back. But nowadays, company can make a ban for this thing. Each and every preference share must be redeemed back. Now, at the most maximum 15 years you can give this thing. After 15 years, it must be redeemed back, repayment back. That is called redeemable. Irredeemable.
Can I explain again this one?
Just see. Redeemable preferences. Redeemable preferences are those shares which can be redeemed back after expiration of the period. Suppose you purchase the preference share of a particular company for 10 years. After 10 years, they can be redeemed back. That is called redeemable. In Marathi, it is called Partiche Agrahak. Marathi is a little bit tough one. You can understand Marathi, but government students can not these things because everywhere English medium is there. Got it? So it can be redeemed back certain period. It is called redeemable. Redeemed back. Irredeemable preferences. Irredeemable preferences are those preferences which cannot be redeemed back. It cannot be redeemed back. But as per the Companies Act 2013, now they can make a ban. Each and every preference shares can be redeemed back after 15 years. Before 15 years, it can be redeemed back. But it is redeemable means after certain period redeemable. Irredeemable means not returned back. Convertible preferences. Convertible preferences are those preferences which can be converted into ordinary shares. Because ordinary shares have got they are the owners, they are the risk bearer, they are they have got voting rights. In fact, rate of dividend is not fixed, but they enjoy more benefits. Consider as a owners of the company. Therefore, conversion. If conversion means preference shares can be converted into ordinary shares, is called that is convertible preferences. Non-convertible preferences. Non-convertible preferences are those preferences which cannot be converted into ordinary shares. Got it? Then cumulative preferences. Cumulative preferences means on preference share fixed rate of dividend is there. Therefore, how we treat preference shares? 10% preference shares means on that we enjoy 10% dividend. 15% preference shares means on that we enjoy 15% dividend. Equity share is not like that. 10% equity share we can't read because rate of dividend is not fixed there. But here rate fixed there. Therefore, 8% dividend 8%, 10% dividend 10%, 15% dividend 15%. So like that. Cumulative means cumulative preferences are those shares the dividend is not lapse. Every year they can enjoy the dividend. Suppose first 2 years by huge amount of profit they declare dividend, pay dividend. Third year due to loss they are not pay dividend.
Like shares.
On preferences. Then on fourth year while declaring the dividend they have to pay third year also. Third year dividend also. Third year dividend also. Then fourth year also. If one of that any years they are not paid the dividend, that is not lapse, that can be accumulated. Once again you have to pay that. That is called cumulative. Dividend is not lapse. Then non-cumulative dividend, non-cumulative preferences. Non-cumulative preferences are those shares the rate of dividend is lapsed. Lapse. While taking and purchasing, under which title you are taking, it depends upon that title. So non-cumulative means dividend is not accumulated, not accumulated. It is not will be accumulated. So 2 years paid, third year not paid, then it will be lapse. Fourth year they can pay. Fifth year paid, 6th year not paid, lapse. That is called non-cumulative. Then another is participating preferences. Participating preferences means the rate of dividend is fixed. But in one particular year, they have got huge amount of profit. So out of that profit, they can pay extra dividend for them. Extra dividend for them. Nowadays, you can see there are so many banks. Correct? There are so many banks, so many Pada Sansthas are there. You know what is bank? Bank is a tank of money. Correct? Bank is a beautiful lady. It can attract the customers. Correct? So it is a tank of money. It will attract the customer. Considers a beautiful lady. The word bank has been derived from the word banka, means a bench. The rich people, they can sit on a bench and lend money to the needy peoples. And later on, the word banka has been derived in banks. Now you can see there are so many banks. Like that, there are so many Pada Sansthas also. They can enjoy anything, Pada Sansthas also. So, in that sense, they can consider even participating. Nowadays, there are so many Pada Sansthas also. They declare even 15%. Apart from that, declare because there is a ban, Cooperative Act rule is there. They declare dividend not more than 15%, up to 15%. But huge amount of profit is there. Extra profit is there. They can do a gift there. They gift. Sometimes a goods they will give to you. Correct? Or voucher they will give. Extra voucher. Means by means of profit, because they got huge amount of profit. And from how they get profit? By making investment, from that money they can get a profit there. So out of that profit they give extra profit for them. That is called participating. Means they enjoy as per their dividend and extra things, extra profit. Then it is called participating. Non-participating means they just get only their dividend so far declared. Extra profit they are not enjoy. This is the types is there. So therefore, this is the source. Then they are given to you decrease in working capital. So these are the possible sources. On that source you have to write these things. Then what you have to show? Application. Application of funds. Means the source so far or money so far, finance so far you received, how you have to apply. How you can go and making application for that. So for that first will be loss from operation. If there is a loss, so you can settle that loss from available sources, available finance. Second, they are given to you payment of dividend. They declare dividend. Correct? So are all these things. They get dividend. Because by giving loan, they charge interest. On interest, they get profit. Say for example, one particular XYZ Sanstha is there and they get 2 crores profit. We keep the 2 crore profits and 2 crore they have to pay income tax. Correct? Then what they do? They declare dividend. They declare dividend, show their expenses, so salaries, everything is there, and they are not paid income tax like this. So like this. Therefore, dividend paid. Dividend on preferences as well as on equity share payment. Then payment of income tax. Some amount of income tax is also you have to pay. What is income tax? Tax from income. Correct? So many sources are there. Actually, there are 5 sources of income. Sources of income will be 5. First will be income from salary, income from house property, because you have got 5 to 10 bungalows there, and you on a rented basis and let on prop basis. Then you get that rent. That income is also added to your income there. Means first will be income from salary, income from house property, then income from gains and professions, means business. You get a business, from that income is there. Then income from capital gains. You have gone making investment on shares, long term and short term. So what source you are getting? Long term. For example, what is the capital gain is there? I tell to you. Suppose you purchase a piece of land. Say for example in the year 2000. Say for 5 lakh rupees. In the year 2000, piece of land 5 lakh. Now if you dispose this in the year 2024, the piece of land, the worth 5 lakh can be sold for 2 crores. 2 crores. Correct? Therefore, there is a huge amount of profit. So from 2 crores, just deduct 5 lakhs. You get 1 crores 95 lakh. If you take that money and deposit into bank, they will charge heavy amount of income tax. Therefore, on capital gain, you have to open the capital gain account. On that gain account, you have to deposit that money. Then there is no income tax. But that money will be withdrawn within 2 years. Again, you will withdraw that money 2 years and make investment in other things. Then there is no tax. This is called capital gains. Then income from other sources. Income from other sources means if you get a gains, winning from lottery, winning from a car, correct? Then winning from crossword puzzle, horse races, lottery also, correct? It is a happening events, but it cannot happen every day. We can't win lottery ticket every day. We can't matka every day. We can't race crossword puzzle every day. Horse races every day. So this is the other source there. And so far deposited, from that deposit we getting the interest, that is also other source. 5 sources are. So for source, how much tax is paid from the business can be made in the application, applied. The next is there, redemption of debenture. Redemption of debenture means payment of debenture. So debenture means it is a borrowed loan. So it is for 5 years, 10 years. On one particular instances they can borrow. Say for example, Kokan Railway is there. On the name of Kokan Railway, they issue debenture for 5 years. They need some interest because on debenture interest is there and on said dividend is there. Correct? So redemption, if you redeem or repayment back on the debenture, then it is, you can apply that source. Application made for redemption. Redemption means repayment. Repayment of debenture they are not stating, but it can use the word specially redemption. Means repayment. Then next is, another is given to you, payment of long-term debt. Suppose you have borrowed loan, long-term. So take say for 15 years. So if you made that borrowed loan, long-term debt is settled. Then increase in working capital. So these are the sources. Like that. You have to show there here in this connection like this. Now we will see these things. Uses of control statement. What are the uses of control statement? How you use the control statement? So for that, once again they are given the chart here like this. If you show by means of chart, you will get better marks for that one. So here by means of chart, it is explained little, but I have explained more. But as per the viewpoint of the exam, you can see this only, that much only. Don't see any other material, only that much material you have to see there. Then here, first they give uses of control statement. So there are 4 sources they are given. First will be they are given. So it explains the finance, then consequences of business operations. We can use that funds by increase the business, or we can use that finance to making the development of our business is the first. It explains how much your business is developed. This is the usefulness. This second I given to you. So it acts as a tool for allocation of financial resources. So this control statement is act as a tools. Tools in the sense it can give some mechanism that whether your business is going on smooth way or not. With the help of that tools, you take the decision regarding the business. If there is a profit, you can continue. If there is a loss, you may say that this business is going on loss. Why to continue? We can discontinue. It is act as a tools of a business. Means while taking decision, it acts as a tools. Then another few diagrams to you is answer complicated questions. There are so many complicated questions in the business. It can answer that questions. Means you can came to know that this is a source available with us. You have to utilize this source by making application. Again, source remain more. Then you can consider start to be another business. So there are so many difficult. There are so many questions which arises in the business. We can answer that questions here. Then next is given to you. It is a test of effective use of working capital. So it is the test of effective use of working capital. So it can help you how much working capital is required for the business. Working capital is required to mitigation the debt for the business. Purchase of material. Suppose you purchase of material for a credit worthiness for a period of 2 months. After 2 months, you have to make payment. Labor, because salary we have to pay every month salary. The month of, say for January salary we can pay in the month of February, March. So for making mitigation the day-to-day expenses. Say for example, so only purchase of a dressing card by 20 lakhs, it is not a use. We have to utilize that card. It requires petrols and other things. Correct, no? So like that also for business, some money is required. That is called working capital. In Marathi it is called khete bhandwal. With the help of that money, business is running like that. So it can help you to doing the thing. So these are the uses. Like that they can ask you. You show the chart and answer one sentence, you will get 2 page mark, 5 out of 5 you will get. The next we will see, the other things will be fund flow statement. How to prepare that fund flow statement. Then that is they are given to you statement showing schedule of changes in working capital. So they will give to you fund flow statement can be prepared by comparing 2 years balance sheet. It is the concept of balance sheet. Funds. Because equity share, debenture, all these are coming on the liability side of the balance sheet. Correct? Fixed asset and everything will be going on the asset side. Correct? Cash balance, bank balance coming on the asset side. Sales on the sales means liability side. So for this, they can prepare a statement showing changes in working capital. Whether working capital is increase or whether working capital is decrease. How they can prepare that statement? Statement means it is a paper, it is a document. Prepare. So last year balance sheet and in this year balance sheet, they can go on comparing this and prepare whether working capital will increase or whether working capital is decrease. It is a requirement. It is a requirement because suppose you have got a company limited is there and you are going making the manufacturing of laptop. Say for 1,000 laptop you have to manufacture in a one particular year. Then your management can take a decision in the next year. You have to make the production of the laptop 1,500. For 1,000 laptop, how much working capital required? As per that, we can go on making forecasting for the next year for 1,500 laptop, how much working capital requires. We have to prepare this statement. Then they can prepare that statement in this making comparison. How to prepare the statement I tell you. So they are given here. This page number they are given 170 page number is given. So this is the format given. How much? First on the top you have to write there statement showing changes in working capital. Then particulars. Then previous year or last year, current year. Then changes in working capital, increase and decrease. 5 columns you have to prepare. First column is particulars. Second column is previous year, current year, changes in working capital, increase and decrease. In that, first you have to take here A. A is, first will be taken current assets. First we have to take A, current asset. Then what is current asset? Conversion of cash into, conversion of asset into cash immediately. It is called current assets. Cash in hand, cash at bank, bills receivable, sundry debtors, prepaid expenses. You take all these things. A is current assets, cash in hand, cash at bank, sundry debtor, bills payable, all these things. Then previous year, current year. Then you show that increase and decrease. Suppose they given to you previous year statement is there. Say for here, it is previous year, current year, and increase and decrease like this they give. A is current asset. If it is given there, current asset is given to you. Say for example, debtors. Debtors. Previous year it was 1,20,000 and current year it is 1,50,000. So there is an increase. They write in the increase column. How much increase? 30,000 increase, like this. Then bank wants to you cash in hand. So it is 90,000. And in this year it is 80,000 cash in hand. So there is a decrease. So we can write there 10,000 decrease, like this. Got it? Then first you have to prepare the statement. First will be A, current assets, debtors, cash in hand, cash at bank, then bills receivable and prepaid expenses. Every time we can take increase, decrease. Then you take their total of A, means total of current assets. Then you will take this total of current assets like this. Then less B, you can take here in this case, less B will be current liabilities. Now we will take their current liability. It is current assets. A, current assets, and B is current liabilities. Correct? Then what is current liability? Conversion of cash immediately, means the current liabilities are those liabilities which can be converted within a span of time, within a short period into cash. For example, in that current liability, sundry creditors, bills payable, bank overdraft. So these are the current liabilities. So like that. But here, by showing this, say for example, there is a creditors. Here 1,20,000, and here it comes to 140. So last year creditors is 120. In this year creditors is 140. So actually there is an increase, but liability will be reverse. You write this in decrease column. Liability reversing, because see, last year liability 120, in this year liability 1,40,000. Correct? Then there is an increase actually, but liability increase means, so you have to pay more money. Therefore write that amount in decrease column. How much decrease? 20,000. So liability reverse. Increase means write in the column decrease column. Increase means write in decrease column. Decrease means write in increase column. Like this. So now bills payable is there. Say for example bills payable. So here bills payable is, say for example 40,000 and it is 30,000. Actually it is decrease, but you have to write here in increase column 10,000. 10,000. Okay. Now after all these things you take once again total of B. Total of B. Then here you write there working capital. A minus B is working capital. Means from this you have this total deduct. You will get here. Then this total take here. Then this will be automatically tallies both things. Then here increase or decrease in working capital after this last statement. Suppose if you take that balance in the second column, it will be decrease in working capital. First column increase in working capital, and lastly it will be tally. So that format is like this. Just I will see this, show this format, because you have not got books. You have got books. What about you? No books. You say don't collect books here. So this is books right here. Huh? Not still. It will become there. So only in that in this thing. So one day I will show you to everything is there. Okay. This is the format you want to. But I told to you verbally it is like this. Page number 170. Just see. Statements or schedule of changes in working capital. Just listen here. Madam, listen. Everything will be get here. No problem. So here first will be current assets. What are the current assets? See, previous year, current year, changes in working capital, increase and decrease. These are the column they made in one particular page. Ask for 5 marks. Prepare a statement showing changes in working capital. Then you have to balance it. In that balance sheet, you can take current assets, current liabilities, and asset like this. Balance it. So here, stock in trade. Stock in trade means stock. Then debtors. Stock in trade in the sense closing stock. The stock which is remain unsold is the closing stock. Then debtors. Then cash balance. Then bank balance. Then prepaid expenses. So this, they are taken all these two total here. Then B less the total of A will be less current liabilities, sundry creditors, outstanding expenses, bills payable, bank loan. You have to take this total. Every time you have to see whether this increase or asset increase will write increase column, decrease will decrease column. But for liability, increase will write that amount in decrease column, and decrease will write that amount in increase column. Then what they have done, just see. You have to take the total. Okay, you have to take the total. The net working capital, A minus B, you will get here. Then after that, increase or decrease in working capital. So, which is the heavier balance they can put? If you get in the second column, there is decrease. If you get first column, increase in working capital. And ultimately, this will be tallies. This will be tallies like this. Now, I am taking one example here. Correct? So, just I will prepare this statement. Just see. I will prepare this. Just take this problem. Only 10. Later on, you came to know how I will prepare this statement. How to prepare that statement, just you see. They can ask for 5 marks. Prepare a statement, changes in working capital. Just see, madam, just see. Don't take anything. It is all problems is also coming in the books. They will not disturb you because they know you are not getting time because you are servicing. Only Sunday is the only you will get this thing. Sunday is the only enjoy in the days. Means on the day only you have to study for all subjects. No, that's why they came to know what material they are supplied. In that material they can ask the question. Now we'll see like this. See, statement showing changes in working capital. Like that you have to prepare. Statement showing changes in working capital. Like this. I'll roughly take. So in class we will take systematically, but we will make fastly because I want to cover that cash flow also. This is particulars. The years belongs to you. Which is the years there? First year? 13. I'll take here 2013, 2014. But while taking the years, you must take previous year first, then current year second. Then it is first will be changes in working capital, increase and decrease like this. Okay. Then you will take here A, current assets. In the current assets, in the balance sheet asset side you see what is the current assets? Cash in hand, cash at bank. So like this. See what is the current assets there? First is goodwill. Goodwill is not current asset. The next. Building, fixed asset. Then stock in trade. We have to take stock in trade. Because fixed asset, goodwill is fixed asset, building is fixed asset, can't take. Only one current assets. In that current asset, stock in trade is there. Tell the amount first. Tell the amount. 49,200. Then next. 42,700. Correct? So here it is decrease. Correct? 49,200, 42,700 decrease. So you can write this amount decrease column. How much decrease? Yes. Deduct from this. You will get there. There you go. See, 49,200 and 42,700. 0, 0 from 12,516 from carries 1 6,500. Correct? Write that decrease 6,500. They don't know it. Just here. Solution is here. Okay. The next number, please tell. Another current assets stock. The next. Trade debtors. Correct. You take here trade debtors. Trade debtors. How much? 14,900. The next 17,700. Correct. So it is also decrease. No, it is increase. Sorry. How much increase? 2,000.
8,800.
2,000? Yes. You came to know this, making reduction and additions. 2,800. It is increased, therefore I write this in increase column. So changes in working capital increase and decrease, like that you have to write. Then next one, bank balance. Bank balance. So in the balance sheet, only current asset must be taken. So these are the current assets: stock in trade, then stock in trade debtors, then bank balance. How much bank balance? 9,000 first. 7,000. Correct? 7,800. It is decreased by 1,000 to 2,000. 1,200 decrease. Okay. Next one. No. Here just we'll see. First will be stock in trade, debtors, bank balance. Okay. Only 3 current assets are there taken. Now what we have to take? You take the total for this. You don't take here this total only. Then you take here total of A. Tell the total how much there? 72,000. 73,100. And this total? 68,200. Okay. Got it? Just see here now. What I taken, this total you take, this total you take. Okay. Then less will be current liabilities. In that current liabilities, what you have to take? Sundry creditors, bills payable, like that. See, liability side. That is this equity share not be coming, debenture not coming, bills payable is there. Yes, bills payable. How much? 11,360. 11,360. The next? 11,840. So actually it is increase, but we write on the decrease column. Actually it is increase, liability is increase, but write that amount in decrease column. How much it is? 480. Okay, decrease column. The next? Bills payable. The next? Creditors. Okay. Creditors.
5,750.
5,750. The next? 5,740. Next? 6,360. Then it is increase. So just see increase, but write that amount in decrease column. How much? 620. 620. Okay. Then any other? No, not that coming. So just see. First you have to ascertain. Sir has told me send this topic, but first you have to take working capital. पहिला वर्किंग कॅपिटल घ्यायला पाहिजे होता, म्हणजे तुम्हाला कळलं असतं सगळं. पण त्यांनी हे टॉपिक टाकल्यामुळे मला हे घ्यावं लागलं. फर्स्ट वर्किंग कॅपिटल तुम्हाला परफेक्ट कळलं की सगळं येणार. मग these are the current assets, these are the current liability. Now you can take this total. How much total this? 17,100. The next? 18,200. Okay. This is there. Then you write here working capital. A minus B. 17,000, 73,100 and 17,100. How much you will get here? 56,000. Then this 50,000. Okay. Just see. From this I deduct this. You will get here 56,050. Okay. Then here, which is the heavier amount you must put on both sides? Which is the heavier amount here? 56. Okay, 56 both sides. Then you will get a balancing figure here 6,000. If you get the amount in the second column, it is decrease in working capital. If you get first, increase in working capital. So it is decrease in working capital. Correct? You will not got. This is a heavier amount, 56. From 56, 50 got 6 balance. There is no balance here. Means if you get this 6,000, it is decrease in working capital. लगा देता है कि नहीं? It decrease in working capital. Got it? Then what you have to do? It must be tallies. It must tallies. Decrease means it comes here in the first column. Or you can take this is the year balance. This is the year balance. Correct? First 0, 8 plus 2, 10 carries 1, 7 and 11 and 13 and 18 carries 1, 2, 8,800. Then you have to put there 8,800 here. Correct? You get balancing here will be 6,000. Therefore, like this. If you prepare this statement, you will get 5 out of 5. Both sides should be correct. This. Otherwise, without doing this thing also, here first we will write in first column 6,000, same amount. Then it will ultimate tallies. Like that, they can ask you for 5 marks. Got it? This is called prepare a statement of changes in working capital. They will give 2 year balances, and with the help of this two, we will see these things. Now, just we'll see here. Like that, they are going to you. Now we'll see the theoretical portion on this ground. We'll see what are the advantages of control statement. 5 marks. Each and every topic they can ask. A, B, C, D. 5 question, 4 question you are talking. Then what are the advantages of control statement? What are the disadvantages of control statement? Like that they can give you. Now we'll see advantages. So here advantages is given in that also. But how you have to write? You draw the point in it and write the answer. Correct? Advantages. Then see here, first will be advantages of after getting this book. I will give this book later on. You make with tick mark for this thing. Then how advantages? 5 marks for at least 5 advantages you have to give. At least 5 points. They are given here 11 point. 11 point is here. Then you have to answer for this. First will be advantages of control statement. Number 1, tool to the management. This is a point, and you have to explain that. You can explain that point. 5 marks, 5 point must be there. At least 5 points. If you write more, you will get 7% mark. Got it? Here also, one of the students says get rank also here. Get rank also. Scoring 98, 95 marks like that. Got it? There is assignment for 20 marks, including all these things. This will be there. Now first it is a tool to the management. First advantages. They are given to you. The control statement is increasingly used as a tool to the management. With the help of this, they can prepare it is useful to the bankers, it is useful to the management, it is useful to the investors, and it is used to the financial institutions. Therefore, it is a tool to the management. Explanation. Second point that wants to you, control devices. So here a control statement can be used as a control devices to the management. They can control the things here. So for controlling the things, so if they want to increase working capital, they can control. Decrease in working capital, they can control. So it can use as a control devices. Second. Third diagram scheme. Requirement of industries. So control statement is required for each and every industries. I told you it is useful for the industries, it is useful to the investor, it is useful to the bankers, it is useful to the industries, and it is useful to the financial institution also. So it is required to the industry. Suppose Suppose you want to construct a industry of 100 crores rupees, correct? And if you go to the bank manager and ask, being as a board of directors, you got, suppose you have 10 board of directors and you have got 50 crores, but you want 50 crores again. And that 50 crores can be raised by taking loan from bank. You go to the bank and ask, we are constructing the factory at 50 crores, please 1 crore, 100 crores, please give 50 crores loan. Then they will see what is your working capital, what is your asset, then what is your balance sheet, how much your balance sheet see, forecasting of 5 years. Then by seeing your documents, they will grant a loan to you. Correct? So it can requirement to the industries also. Then third they are given to you. The fourth is financial help. The potential shareholders can also get the idea from the financial health. Investor means shareholders, the major holder. They can invest their money by seeing their wealth, whether that company is profitable company or not, whether that company is good or not. So there are so many big business organizations. Big organizations are there: Tata, Birla, Procter, Gamble, and Hindustan Unilever, Reliance. Renowned companies are. Why have to invest our money in that? Because it is profitable. So like that, it is the financial health can be ascertained by the investor. Advantages. The next is given to you liquid position. If you prepare a fund flow statement, how much fund flow is available with you, you can came to know what is your liquid position. Means how much cash with you, what you can liquidate, which asset you can convert immediately, you can came to know. With the help of cash in hand, how much is there, bank balance is there, debtors is there, immediately you came to know. Baba, you can convert it immediately and get money. Like this. So this is the things. So I am explaining more here, but it is given in one line here. In that sense you have to write by scoring good marks. The next is given to you effective use of working capital. So fund flow statement is the effective use of working capital. We can ascertain working capital by following this base: increase or decrease in working capital. Working capital can be ascertained current assets minus current liabilities. In this sense, effective use of working capital. Then next is given to you financial operations. With the help of these fund flows, we can go on making so many financial operations. For example, we declare dividend, we receive dividend, we make repayment, loans can be settled, so income tax can be paid. So all the financial matters can be done with the help of this fund flow. You can come to know how much this is the fund available, what I can use this fund by declaring dividend. That much money received, use these things. So you came to know these things. Therefore, financial operation can be done. Then helps to fund flow statement. So being as a financial manager, it can help to prepare the fund flow statement. This is the advantageous thing. The next important tool to the management. So fund flow statement is a very important tool to the management to taking the decision to continuation or discontinuation of the business. The next is given to you liquid position of the business. It shows the liquid position of the business immediately or accurately. It can show the liquid position. And lastly, credit worthiness. With the help of fund flow statement, we can came to know what is the credit worthiness. Credit worthiness in the sense, suppose you purchase a material. So for how many periods you have purchased that material on credit worthiness, credit base. So purchase is made for 2 years. Suppose you purchase material and trader you can say, I will pay this money after 2 months. Then credit period is 2 months. Credit worthiness 2. Like that. Then it can came to know the credit worthiness of the business. So these are the advantages. So simple. If you read 1 or 2 times, you came to know. But you ascertain the point like this. Just see. Ascertain the point like this. The point like this answer. Point answer. So the explanation, the meaning where is stop there only. In this sense you have to use this. Means you have to skill your talent.
You have to answer. These points we have to
Answer. Advantages they ask. The first you write tool, then little information. Then here control devices. Then a fund flow statement can be used as a control devices to make the financial planning more effective. Bas. Like that you have to write. Because if you see that point, 5 point required, you required 7 to 8, very nice triple page mark. But it is a technique to showing that point must be there. Then we'll see limitation. What are the limitations for this? Here in this case, fund flow statements suffer from certain losses also. So that goes to you limitations, disadvantages, demerits, pros and cons like this. How they put it? So many names. Disadvantages, demerits, limitations, and pros and cons. How they put it? Laksha banega. As we can use a different word for that now. Now we'll see what are the limitations of the, because each and everything there are some limitation also. Because coins, that is 2 dice, 10 and this thing like. So there is also some limitations are there. Number 1 is information contained. All the information that contains in fund flow statement is a traditional one. Traditional one. There is a traditional approach. There is no modern approach. Therefore, only from this statement you came to know how much funds only. Only funds. Availability of funds. Sources of fund and application of funds. It is the traditional ways. The modern approach is different now. Say for example, the classification of account. Traditional classification of accounts are real account, correct? Real account, personal account, nominal account. These are the traditional classification. It is useful because much thing depends on this. You can take anything in the world, we can classify into 3 accounts only. But nowadays we can use the modern approach also. Accounts are classified into asset, liabilities, correct? Assets, liabilities, income, expense, capital. This is the modern approach. Got it? Therefore, it can be considered as a traditional method, traditional ways. Therefore, limitation. Second diagram to you, cannot replace traditional financial statement. If we use this fund flow statement, nowadays from the CS, CS and all these things, CS, CS and all these things, they abolish this topic now. Due to traditional, it become outdated. Therefore, it is discarded now, nowadays. But for your level, you also keep as it is. You cannot replace the statement in the modern approach here. Because as per the old thing we are prepared, trading account, profit and loss account, balance sheet. Nowadays we are not preparing like that. What we have to prepare? We prepare income statement in vertical form, balance sheet in vertical form as per Companies Act 2013. Correct? Therefore, it is a drawbacks. Traditional ways they can prepare, this remains as a drawbacks there. Then third, there are fourth, not much revenue. Fund flow statement is not much revealing a balance sheet. It cannot give the concrete idea regarding the balance sheet by this method. Therefore, drawbacks. Then argues that components, cash more important. So argues more important means here each and everything is funds only here. But nowadays cash is very important. Cash is very important. So it can be neglected the cash here. It can give the weightages for funds only. Funds only. Therefore, once again, it is a drawbacks. So that goes to you. And lastly, 5 number that goes to you. That is, it also argues that balance sheet is itself is the nature of fund flows. So nature will be the balance sheet, but fund flows only flows shows the only flowing of fund only, and that is the things that can be taken place into the consideration. So that's it for the fund flow statement. Got it? What is the question they can ask to you? They can ask the problem, prepare a statement showing changes in working capital. What are the sources and application? Statement of sources and application by means of all sources, all application. One thing. Then what are the uses? What are the advantages? What are the disadvantages? Like that they can ask the question. Got it? Now I'll move towards the cash flow statement. Okay, cash flow statement. Now we'll see the cash flow statement will be meaning of cash flow statement. By means of preparation of the final account, we can came to know, and by preparation of fund flow statement, we can came to know only the funds. Incoming of funds and outgoing of funds, we can came to know. It is not very enough to the business. Therefore, we have to once again prepare a modern approach, and modern approach we can prepare a cash flow statement. Then what is cash flow statement? Cash flow statement is a statement prepared to giving the exact ideas of cash. Everything regarding the cash, it can give the exact ideas of cash. Therefore, we can go on making three operations are there. We can prepare cash flow by making three activities are there. Then which are the three activities? Activities mean operating activities. Operating activities mean by making operation, opening balance, then profit and loss account last year in this year. Right? By making operations, make profit during the year. Then increase and decrease in assets, current assets. Increase in current asset, decrease in current asset. Decrease in current liability, decrease in current liabilities. So all these things we can go on making the operation. Depreciation charges, everything is there. Income tax payment, dividend received. So like that, by making that operation, they can use the operating activities. Another activities is investing activities. Investing activities in the same, they can go on making the investment. Investment can be made for purchase of asset. That is investment, or sale of asset also. That is called making the investing activities. And lastly, by making the financial activities. Financial activity can be done by making that issue of shares, issue of debenture, loan taken, and another will be by making repayment of that one. That is repayment of shares, repayment of debenture, or redemption of debenture, repayment of loan, repayment of long-term loan. So like this. These are called the financial activities. By making these activities, they can ascertain the net cash flow. So for that, each and activities, there is cash incoming and cash outgoing. Operating activities, inflows of operating activities, then outflows of operating activity. Inflows means how much cash coming by making this operation. Outflows means how much cash is going by making this operation. For investing, how much cash is incoming. For example, suppose this sale a land, there is inflows of cash because cash is coming. Correct? Purchase of land, outflows will be there because cash is going up. So like this, each and every activity we came to know that how much cash is incoming, how much cash is outgoing. Therefore, for each and every activities, inflows and outflows will be there. Therefore, it is the absolute and accurate things regarding the business can give to you the cash. Therefore, once again, it is a very important tools to the management to help the cash position. The liquidities and cash position of the business can be ascertained by making this cash flow statement. Therefore, there is an Indian accounting standard 3. As per AS3, Indian Accounting Standard 3, they prepare cash flow statement in this ways and ascertainly and check the balance for previous year and in this year. So it is a very useful this thing. So this is called the cash flow statement. Now we will see what is the distinction between cash flow statement and fund flow statement. Very right question they can ask. Distinction between cash flow statement and fund flow statement, or distinguish between fund flows and cash flow statement. This also you have to write not less than 5 points. 5 marks are there. So here near about they are given to you 10 points. Once again, here also they are not given point. Correct? Once again, here they are not given the point. Because just see, I will introduce myself first for the first time. Means because I services near about 40 years. I serve being as a lecturer of accountancy, economics, management accounting, auditing, so many subjects I taught. Completed my 34 years service and I am retiring. I am retired. I am taking tuitions. In Savantpuri, there are 10 chartered accountants. They are my students. Our gold medal, everything they are getting. Every year I am taking extra classes, tuitions now. SSC classes under the name and style. SSC classes I am taking tuition. Every year 100 and 100 they are getting. In this year, this is the 29 students we got 100 and 100. Those persons who scored 100, they are all becoming chartered accountant. They become CA. In Savantpuri, 10 students, they are completed the chartered accountant. They are leading chartered accountant here in this thing. One of my students is there. He has made MCOM and CA and DISA also. Means it is a government recognition. He is a recognized chartered accountant here in. He also scored 100 and 100, and he scored auditing 97 marks. Very fortunate is 97 score. So like that. So my education is MCOM, MA economics, then MPhil finance, PhD, but this discontinued due to that demonetization. I will not done this thing. Then EGDBM, MBA also done, and DH is also done. Therefore, I am retired, but due to the getting chances of the students only, I attach with this Open University for MBA and all these things. I have taught MBAs also because they are discontinued MBA also there, and then MBA it is going to the that RPD, JB Mike. There also I taught. So like that. Therefore, distinction you have to write in point also. The first will be make 3 columns like this. First will be point of distinction, a small column, then fund flow statement, and another will be the cash flow statement. You have to do like that. Now we will start now. First will be the meaning. What is the meaning of fund flow statement and cash flow statement you have to mention. So they are given to you. The term fund refers to working capital and show the changes the position of working capital. Fund flow statement means it can show the funds refer to changes in working capital, means fund flow. And whereas the term cash refers to cash only, and it can show the changes in cash position. It shows the changes in working capital in fund flows, whereas in cash flows it can show the changes in cash. This is the meaning first. Second, they are given. Then planning. Second point is the planning. Then the analysis is more useful in long-term planning. This fund flow statement is very useful for long-term planning, whereas cash flow is useful for short planning. Short planning. because for the short term, short period, you can use the cash flow. For short planning, cash flow is useful, and for the long planning, fund flow is useful. Then third bank gives to you changes. So it considers the changes of all the current assets as well as current liabilities. Fund flow statements show and changes all the current assets and current liabilities. Changes in changes in working capital. Changes in working capital, changes in current assets, changes in current liabilities, like this. So then another will be, this is both, this indicates and simply give the changes in receipts and payment. Whereas cash flow statement make the changes in receipts and payment. Receipts and payment mean inflows and outflows. Changes in outflows and inflows. How much change made in inflows and how much change made in outflows. Cash is incoming, cash is outgoing. Change made like that. Then another will be improvement. Improvement in working capital does not mean improvement in cash position. Suppose if you made an increment in working capital, it doesn't mean that there is improvement in business. If you made the change and increment in working capital, it doesn't mean that it can increase the business. There is an improvement in the business. Whereas here in this connection, cash is one of the constitute of working capital and it can improve cash position. So there is a constitute, only cash. It can certainly and definitely show that changes in cash position there, changes in liquidity. So like that way goes to. Then inflows and outflows. In what you can say fund flow statement, there are sources and application of funds. In fund flow statement, there are sources of fund and application of fund. Whereas in cash flow, there is inflows of cash and outflows of cash. Inflows of cash and outflows of cash. Then next is given to you vast concept. So fund flow statement is a vast concept. It's a vast concept. Whereas they are given to you cash flow statement is a narrow concept. It is only regarding the cash only given. Regarding the cash given to you. It is a narrow concept. And in that fund flow statement, everything is done there. Changes in working capital, they can prepare fixed asset also. Then they can ascertain increase or decrease in working capital also. So there is a broad concept. Whereas cash flow is a narrow concept. Is regarding the ideas regarding cash only there. Therefore narrow concept. Then effective test. So here this is the test effective use in working capital management only. This test is only effective in working capital. Fund flow statement is the test which is effective in working capital management. Whereas this is the effective statement, effective test where cash flow is used. Incoming of cash and outgoing of cash, in that same it is the effective test there. Then another helps fund means helps. So with the help of fund flow statement, financial manager can ensure that business will be business that can be expanded or not or improved, and for business fund flow is required. Whereas with the help of cash flow statement, financial manager can ensure the business will be liquid asset only. Liquidity can be useful for this thing. Then another diagram to mind explains. So this can explain the changes occurred in the item of to balance sheet. Fund flow statement occur the changes the item of to balance sheet, previous year balance sheet and current year balance sheet. Whereas this explains the improvement of cash for all those changes with effective position of cash measures. It can show the changes of cash only, whereas it can show the changes in two effective 2 years, previous year and current year also. So like that it is going to you. And lastly, 10 number indicates. So fund flow statement indicates overall credit worthiness of the business. Control statement can state what is the credit worthiness, how much credit allows, how much credit given for material, labor and overheads. That much that can be taken place in the case of control statement, and it shows how much money should be balanced in cash, in cash box, and at a particular given time. How much money is there, how much cash balance is there, how much balance is there in cash box. It can show the cash flow statement. So that's it for the distinguishing point. So explain. Distinguish between control statement and cash flow statement. Now we'll see what is the utility of cash flows. उपयोगिता क्या है? Why it is useful? Cash flow statement is utility. You will see there. So utility of cash flow statement in that sense we will see here. Disclose the, once again they are given like this chart. By giving more chart, diagramic representation to show, you will fetch good marks. We can imagine also how much you are scored. Means for better scoring, just you have to give chart and with point. Explanation will be point wise. You have to show the explanation. Now we'll see. First will be the utility of cash flow. Number one, disclose the movement of cash. Second, they wants to you disclose the success or failure of cash planning. It can disclose success or failure of cash planning. Third will be helps in evaluating of financial policy and cash position. And fourth, they wants to you providing information about funds available from operations. So these are the utility they are given to you. Now we'll see how much it can show the movement of cash. It can disclose the movement of cash. In what sense it can disclose the movement of cash? So here, for by doing and making the three types of activities: operating activities, investing activities, financing activities, it can show the movement of inflows of cash and outflows of cash. How much cash is incoming, how much cash is outgoing. It can show the movement. So by making this, therefore disclose is the movement of cash. How cash is moving, how cash is incoming, how cash is going outgoing. It can disclose, it can state shows like that. Then second is disclose success or failure of cash plan. Because planning is nothing but it is one of the important function to the management. Planning is looking ahead. Correct? Each and everything for doing everything you have to plan first. Correct? So planning is nothing but it is the looking ahead functions. So what will be the planning we have to do? So therefore here, with the help of the comparing the projected cash flow analysis and actual cash flow analysis, it can show to you whether your planning is success or failure. Where you have made the plan, your plan is successful or your plan is failed. It can disclose with the help of cash. Because you can go on making planning and making forecasting of cash like this. Therefore, it discloses you, it can show to you whether that business is successful, whether your plan is successful or whether his plan is failure. It can show this thing. Then third value given to you. Third value given to you helps in evaluating the financial policies and cash position. It will help you to analysis of cash position in the same cash in the business basis for all the operation and project it of cash flow statement and enable to the management and to go on making the policies of the cash policies can be made. With the help of this, it will help you. Then providing information about the funds available from operation. So it will help also which operation you have to make. So by making that operation, how much cash inflowing and how much cash is outgoing. Means operation, by operating activities, how much cash is incoming, how much cash is going. Investing activities, by making investment, how much cash is incoming, how much cash is outgoing. And by financing activities, means how much cash is incoming, means to raising funds, raising finance, how much cash means how much shares issued, how much debenture issued, how much loan taken. From this you came to know how much cash is incoming, cash inflows. And for making that payment, payment of sales, the redemption of debenture, repayment of loan, then payment of income tax. So to that extent, you came to know that how much cash is outgoing. So we will get this thing. Then information about funds available from the operation. And lastly, other users of cash flow statements are, this is useful for the supplementary instrument. It discloses the volume as well as speed with the cash flow in the different segment of the business. It will give that how much cash speed is there, means how much bank balance, how much cash balance is there. It can give the segment. Whether your business is going on steadily, expanded, it is going on prosperity way or not. It can show each and everything by this thing. Therefore, these are the utility of cash flow statement. Now we'll see. Now they are given some example for this will be useful infrastructure, useful transaction resulting cash inflows are. There are some transaction by making cash is incoming. How cash is incoming? They are given issue of shares. If you issue the shares, cash is coming. Then issue of debenture. If you issue the debenture, cash is coming. Sale of investment. If you sell the investment, cash is coming. Then they are given sale of asset. If you sell the asset, cash is coming. Then cash from business operation. The making operation, how much cash available there. So these are the inflows of cash. Then they are given to you cash outflows due to application of various purposes. Then outflows of cash. Cash is going for making various purposes. Means by making the other activities, outflows of cash, how cash is going out, it can show in that same. First will be redemption of debenture, repayment of debenture. Then repayment of sales, repayment of loan, repayment of long-term loans. Then they are given purchase of investment. If you purchase the investment, cash is going. The purchase of asset. If you purchase asset, cash is going. Then cash issues of business operation. Then purchase of investment. So to that extent, all cash is outgoing. Cash is outflows, inflows and outflows is going there. Then cash outflows due to application of various payment purpose. We can use some cash for outflows purposes are first will be they are given to you repayment of dividend. If you pay the dividend, cash is going. Income tax paid, cash is going. And same redemption of preference, redemption of debenture, repayment of loans, and payment of taxes. So to that extent, these are some applications. These are some example is given to you in incoming of cash, inflows of cash, and outflows of cash. Whenever is cash coming, you consider this is of inflows. Whenever cash is outgoing from you, it is considered as outflows of cash. So these are the examples they are given to you. After that, now we'll see what are the advantages of cash flow statement and what are the disadvantages of cash flow statement. They can ask you. They can ask you like this: uses of cash flow statement, advantages of cash flow statement, limitation of cash flow statement, and the format of cash flow statement. What are the sources? Operating activity. What are the activities? Operating activities, inflows, outflows, investing activities, inflows, outflows, financing activities, inflows, outflows. Such types of question they are given. First we see advantages. So advantages is not given in our book. Not given, but they can ask question. So from that I can put this thing. Advantages is not given in our book. Limitation only given. Now we'll see helpful in planning and coordinations. The first and foremost advantages for cash flow statements, it will be very helpful for making planning and making coordinations. Coordination between inflows and outflows. Making coordination, making the relations to the related management, and make to plan the availability of cash, how much cash is available. Accordingly, you can go on making plan. If huge amount of cash is available, you have to plan to purchase the asset like that. This is the making planning is useful, means helpful in planning and coordination is the first advantage. Second, they wants to you helpful in controlling. This cash flow statement is also helpful to controlling also. You have to control the outgoings. Sometimes there are much cash is outgoing. So income is very nice for this thing. Cash incoming is better for us. Correct? But outflows will means cash is outgoing. It is better because how much cash available with the help of that we can cash is outgoing. But it can control to you inflows and outflows. It can control very nicely this cash flow statement. Then helpful in internal financial management. So cash flow statement is very useful for the internal management. Internal management means, you know, there are three levels: top level, middle level, lower level. So it is very helpful for the internal management. Means internal management are all the bosses are coming there. So very useful for the boss. So see that position, what the liquid position of the cash. So for this, accordingly, they can go on making plan for this thing. So for the internal financial management, cash flow is very useful. Then knowledge of cash and cash position. It will help you and get the ideas of knowledge of available of cash and liquidity of cash. So this is very useful this thing. Then helpful in short-term financial decision. So cash means, you know, it is a short-term things. So where available cash is there and there are some short-term provision, short-term planning can be made within a short period. So that cash is very useful for making that things here. Short-term financial decision. Mean for the short terms, for the short things, to making decision, cash flow is very useful. Then another is they are given helpful changes the financial position of cash. So this also help you lot to changes the financial position of the cash. Changes the financial position of the set means you have to prepare the statement showing the financial position of the balance sheet. So to increasing, to making the development of the balance sheet, means if the balance sheet is much more than that, then it requires the tax audit and all this thing. It depends upon turnover. So turnover is there, more turnover, the total of the balance sheet is more there. So for this purpose, helps in changing the financial position of the cash is also there and useful for this thing. And advantages, helps in reporting to the management. So this cash flow statement is also report to the top management that business is going on smooth way, there is a prosperity, there is a progress, no regression in the business, and accordingly top management can take the decision to continue the business due to there is a progress in the business or due to prosperity of the business. So these are the things they are given to you in this connection. Okay, so these are the topic for this thing, cash flows and control state. So they will give to you March 5 because we have to go to Madagawa. So we will stop here. Okay. Okay, thank you. Sir will give to you and I will do this thing, notes and all. Sir will send this thing. I will give. So all questions which is asked in the examination I will give here. Define budget and budgetary control. Question 5 they asked you. Explain budgetary control. The group I will try to send your group. You use this thing because all point things I will give to you. The control statement and this distinction just see. Meaning, control statement and cash flow. Useful, indicates, increase, effective, changes, improvement, use for. Short, because it is very easy to remember. If there is no point, you can't write this. So, like every this thing, everywhere I will done the point here. Okay, thank you. And
Next time, sir, can you take the class morning time? Morning time, can you take class next time?
next time, just we'll see. Because
So I have to come from
Margam, it is difficult for you.
Yeah.
Traveling from. It's just we'll see. It's depend upon the students. And if you if you get that book, on book I will give all the point underlining, and accordingly we can study the things. Okay. Thank you for incoming and enjoy. Thanks a lot. Question paper will be there like this. You can collect the question paper also like this. Define budget, according to the explain fixed budget and flexible budget, like that. All the questions they answer there. Okay, thank you. मॅडम आला की नाही पुस्तक त्यांना
येणार आहे तोपर्यंत त्यांना पीडीएफ पाठवलेली आहे भेटली पुस्तकं आली काय द्या मला जरा एक आठवडा तरी लागेल.
पीडीएफ पाठवलं जस्ट यू कॅन सी दॅट बघा तुम्ही इन मराठी समथिंग येतं ना मग तो क्वेश्चन पेपर मिळणार आहे मी तुम्हाला हे पण नोट्स पाठवा नोट्स जरा पाठवा मॅडम येऊ दे
हो,
बरोबर
पाठवतो.